Hello everyone and welcome back to Orilla Crypto Land. In this video, we'll discuss the most powerful single candle pattern, the Hanging Man, which every trader should be familiar with. We're gonna have series of instructional videos on reversal and continuation candlestick patterns. By using these patterns, you can better analyze and predict stock market trends. I'll be explaining each pattern in detail and teach you how to use them effectively. So be sure to smash that subscribe button and hit the notification bell to stay up to date. Reversal candlesticks are divided into three categories. First, single candle patterns, second, double candle patterns, and third, triple candle patterns. At the beginning of this tutorial series, we dedicate the first video to the powerful single candle pattern, the Hanging Man. This pattern usually occurs in an uptrend. When this Hanging Man pattern is seen, it's a warning for the end of an uptrend and a change in direction from bullish to bearish. This pattern rarely occurs, but if this pattern appears in the chart, it will be a powerful sign of the trend change and may have a bullish green body or a bearish red body. The candle is composed of a small red body, a long lower shadow, and a little or no upper shadow. The Hanging Man shows that selling interest is starting to increase. In order for the pattern to be valid, the candle following the Hanging Man must see the price of the asset decline. Before moving to a real chart example for this pattern, here are some key takeaways to keep in mind. A Hanging Man is a bearish reversal candlestick pattern that occurs after a price advance. The advance can be small or large, but should be composed of at least a few price bars moving higher overall. The candle must have a small real body and a long lower shadow that is at least twice the size as the real body. There is little or no upper shadow for this pattern. The close of the Hanging Man can be above or below open. It just needs to be near the open so the real body is small. The long lower shadow of the Hanging Man shows that sellers were able to take control for part of the trading period. The Hanging Man pattern is just a warning. The price must move lower in the next candle in order for the Hanging Man to be a valid reversal pattern. This is called confirmation. Traders typically exit long trades or enter short trades during or after the confirmation candle, but not before. Okay, let's move on to an example chart. As you see, here an uptrend happened and closed with a Hanging Man. This next bearish pattern is like a confirmation to the power of Hanging Man pattern in closing uptrend and opening downtrend. At the end of an uptrend but forming Hanging Man, a powerful downtrend happened. In this chart, we'll see how the Hanging Man pattern is affecting the trend. Here, we are in a downtrend, and an uptrend is happening. Okay. Here, as you see, after an uptrend, a Hanging Man pattern with a long lower shadow and a short upper shadow is formed. Next candle is a negative candle and closed negatively as a confirmation candle of this Hanging Man pattern, and the trend has changed direction from bullish to bearish. See how powerfully the bullish trend turned into a bearish trend. But the key point is here. Hanging Man formed during this process, but the confirmation candle didn't appear here. And a negative candle should have formed, but it didn't. So this pattern was not confirmed and was failed. Here is another chart. We can see a downtrend, and an uptrend is forming here. An uptrend is closing with Hanging Man with long lower shadow, and a bearish confirmation candle comes after Hanging Man. In the following, we can see that a sharp downtrend has occurred here. The decline rate of this pattern is close to 30%. If you enjoyed this video and learned something, don't forget to like this video, and remember that knowing each one of these candlestick patterns can have a crucial role in your tradings. So hit that bell and be informed when we post.